Hi guys, Andrea Unger here from Unger Academy together with Francesco Placci.
Hi guys.
And we're here to review how our 2022 went in terms of trading. And I will present the performance of the futures account with where the trading systems work. Same will do Francesco. He will probably tell you also something about cryptos, but this will come later. It was a tough year, for sure. Everything went wrong, not that wrong, but wrong enough to be a bit of disappointed. But in any case, there is a lot to learn from periods where things don't go exactly how you wished. So I see this as an opportunity. And I already found some opportunities in what you're going to see. I will tell you later.
Hi, we are the Unger Academy, and we teach traders how to make money in the markets. Our founder, Andrea Unger, had been struggling with trading for years until he developed his automated trading method, which he used to become the only 4-time world trading champion. Subscribe to our channel for free tips and tricks.
So just to go through my performance during this year, here you have the portfolio analyst of Interactive Brokers. And you see that I ended up with about 5% performance on my account, with a very bad June, worst return. And up to August, things went well. I was happy. I mean, I should have gone on holiday after that, but I kept on trading, and the latter part of the year went down. 2 bad months, September and November, and 2 horizontal months, October and December. So obviously, when these things happen, I look into the worst periods to see if some specific markets did particularly bad. And the first month I analyzed was June.
Andrea,
sorry, Francesco, the benchmark.
Let me say that compared to the benchmark, your portfolio did quite well.
Yeah, thanks for helping. Yes, if we compare to the benchmark, here we have American stock market, international stock market, and the world stock market, which are more or less the same. They all went pretty much bad, I would say, and I did better, but not well enough, in my opinion, specifically because some things went wrong, and I will tell you. Let me show you, first of all, the June. Okay, I only put the losers here. You see that the worst loser is gasoline. I mean, all the mix of systems I use on gasoline, these did very, very poorly in June. They altogether, they lost more than 4% on my whole account balance, which is a lot, believe me. But you see, they are together with other energy futures, crude oil and heating oil, and at the bottom of the list, natural gas. But natural gas is more a coincidence. I mean, natural gas is not correlated with the first 3 there generally. So it's here in this losers list, but just because it lost on its own. But obviously, the bad reaction to all my setups of a whole bunch of systems on the energy group is something that hit heavily the June performance. And this is an interesting note, which I will explain later, but is bad news, of course. Now, you see, gasoline is the worst. And together with this, we see also a very poor month on the mini S&P 500. I have many systems on the mini S&P 500, and the mix of these did bad in June, which helped, let's say, the losing month, helped in negative terms in this case. Yeah. If we jump to the month of September, which also went bad, and was the first of the latter part of the year to be to make the year bad, here we see that the mini S&P 500 is the market where I lost most money. Together with that, again, gasoline. So it seems that these are the worst things that I had to trade during the year. For the first time, you see also the 30 years bond, which means that the mix of systems I had on the 30 years bond did bad. And it's not a surprise, because the year on the bonds was weird. if we think about the scenario that we saw, the problems with inflation that drove the markets to the bottoms, and the worst thing all over this is the correlation to the downside between bonds and indexes, which normally does not happen. But this year was a particular year where both moved together in the red. Here in the list, we saw Kansas Wheat. I have one system. I must admit, I have only one, and this system chosen by my software Titan to let me know the list to systems, but for the system to trade during the month, chose the system for September, and it was a bad choice. Happens, and I put it here just because of the number. It's the number 4 in the list. But I mean, this is a coincidence because it's one system which happened to lose. Jumping to November, we see that here the losers are smaller, but I had many more losers. I only show the first 4 just to let you know. The month was a loser, so obviously I lost money also on the other markets, and I did not make enough money to cover these losses on the winning systems. Bonds, in any case, were the worst. You see that. And again, we find crude oil in the second spot here. Then feeder cattle, which is a standalone, let's say, because feeder cattle is a bit uncorrelated to the other markets generally, as all meats systems or markets are. And then we have gold. Gold, which you will see later, played an important role in the whole year. And here it's in the 4th place, but it lost also in other months. But now I see this because it's in the 4th place here. Looking at the whole results over the year, here it is. Here I put also the winners because I also made some money having finished in plus. You see that the top winner is gasoline. But you remember you have seen gasoline in the top losers list once, the worst in June. And in September, it was on the 2nd place. So actually, this might sound astonishing to find it here as the best performer of the year. Truth is that gasoline did obviously incredibly well in the first months of the year, and also after the 2 losers that you saw, it did well. So actually, what happened in June is sort of a retracement or something like an overbought area of something where you went retrace. Obviously, this applies to trend following, but gasoline as a performance of systems, as a responsiveness of systems to their common behavior, did its best on the first part of the year, then coming out sort of drunk after that incredible scenario, which you all know happened in the first part of the year, due to the sad news about war and all the energy crisis that we had. It arrived to a point where it was too much. And when it was too much, it started moving badly in terms of what it normally does, because systems are built on what a market normally does. If a market behaves abnormal, obviously you get to something that loses money, and this is what happened in June. But overall, you see gasoline did very well. So what I'm investigating about, and Francesco knows because I already involved him, is to understand if there is a way to detect a moment where a market really behaved in an exaggerated way, so that it's better to stop everything for a while, to wait until it's calm again or normal again. Unfortunately, I've not found an answer to this yet, and because we all look for a numerical answer, because we work on numbers to make our decisions. So we have to find something that can be replicated. So to find something where we find clear information about now it's time to stop until blah, blah, blah. We are investigating. Maybe end of next year when we show this, you will see the answer to this. So we all take advantage of it. I hope so. But in any case, going on the list, second place, there is soybeans. And soybeans is a good news, of course. It's not a surprise, because in the last 3 years, more or less, I can tell you that soybeans came back to their brilliant behavior in terms of systematic trader. There has been a while where they were a bit choppy. Now, in the last 3 years, I said, most of the systems behave very well. I will probably work on soybeans anyway a bit more, because I want to add systems to my portfolio of systems on soybeans. There is still much to discover, especially on bias, seasonality, and so. So I mean, I will probably work on this because they are really moving well in terms of automated trading. Third place, you find live cattle. I told you before that meats are sort of uncorrelated. It did very well. It's more a matter of facts. It did well. That's it. It's not because meats did well. In fact, at the bottom list of the losers, not the worst, but the best loser, let's say, you find feeder cattle, which is the cousin, the little brother of live cattle. So actually, it's more a matter of how my system, my portfolio system looks like. And live cattle did well, feeder cattle did bad. So just they are there because they did so. The good news and the surprise of 2022 is EuroFX future on Euro US dollar. This did very well, you see, 2.3%. And I can tell you that EuroFX was a market that did incredibly well for systematic trading up to 2011, more or less. And after that, all systems, I don't say broke down, but led to difficulties in delivering performance. Lately, I would say before 2011, most trend following stuff worked very well. After that, due to a decrease in volatility and also in trend, let's say, most of the systems changed the behavior. And I also introduced mean reverting systems on EuroFX, and they did well. But I never found brilliant years on this future, like they were what you see here. And last year was good. Of course, there has been a big move, a huge move, and this helped, of course. But it's interesting how this and other currencies did well. Maybe Francesco can confirm or tell me that I'm wrong later on about currencies in general and their behavior throughout the years. 2011 was the last year where I got something where I liked these markets. After that, I kept them in my portfolio. I did well, so that EuroFX is here in this list today, but they never delivered a decent performance. On the fifth place, you have a Euro bond. This is interesting because it's a price to my choice to keep also short entry setups in my systems, even though they did poorly all over the historical backtest. But I made a choice to keep also break-even or even sometimes losing setups in the systems together with the long entries, which did well, of course. But in the year which we just passed, where there have been interesting or heavy down moves in the markets, these setups made their job very well, and you find bond here in the list. The American cousin, 30 years bond, on the contrary, did very bad. Here, all the mix of systems I had did not really get to their duty. They lost money, they heavily lost money. It was a crazy year for bond. I have also short entry setups on bonds, on the US bonds, but it was not enough. Generally, you see, I mean, the performance is a disaster on bonds, and I'm not afraid of the next results on bonds, of course, because I trust the systems that I have. They are still performing after the expectations, let's say. They are within the borders where you can define a system alive and kicking. But this year was a disaster. The real bad news here are the next ones. Heating oil and crude oil. They both did very bad. Apart from heating oil, okay, this is a small market, I don't have many systems, but crude oil did bad. While gasoline took advantage of the volatility of energy markets, crude oil, which could have done the same, wasn't able to grasp the necessary entries this year. And this is my fault. I address me as the culprit of this because I believe that I kept too old a mix of systems on crude oil, and not refreshing the mix of systems happened to respond bad to the moves we found this year. Gasoline systems are newer, let's say, just because gasoline became more interesting in the later years because of volatility, of liquidity of the market. So I didn't consider gasoline earlier. While I did, crude oil was one of the first commodities I traded back in 2010. But I stick too much to the older mix of systems, and this probably harmed the performance on 2022. I can't say the same about gold, because I'm actively working on gold, but the year was bad. Gold is actually alternating good years to bad years, so I hope for a good 2023 now. But gold was one of the disappointing results of this year, really disappointing, because you see, not just because of performance, because I believed a bit more in gold. Mini S&P mix did bad, very bad. I'm not dramatizing this anyway, because the year was a crazy year in terms of geopolitical, macroeconomic scenario. So obviously, this drove the index stock market crazy, let's say, or crazy enough to respond bad to all the normal and standard behaviors they show. And this reflects in the mini S&P performance. So I'm not happy about the performance, but I'm not criticizing that too much. The mix of system is good. I expect it to recover very well as soon as the market conditions come back to normality. I accept this, even if I don't like it, of course. And Feederkettle, as I said, is sort of a standalone, which did bad, okay. I made more money on LiveKettle, so they balanced themselves, more or less. And this was more or less the year I had. Not a good year, as said, better than benchmark, said Francesco, so I'm happy about that at least. And I learned that I have to work on refreshing the crude oil mix, monitoring gold, and hoping for come back to normality as soon as possible. In any case, I see many opportunities in the coming year for the mix of systems that I have, because I see markets, in spite of a bad latter part of the year, are starting to work in a proper way again. Now, Francesco, maybe you can show us what you did.
Okay, this is my account, my future account. I start saying that I'm quite satisfied, let's say, compared to the benchmark of my results. 16% with 16% of drawdown, so they are balanced. But compared to the mini S&P that are at minus 20%, I think this could be a good result, even if I had quite a lot of volatility at the beginning of the year, in the previous, in the first 6 months of the year, especially in January, the first drawdown of the market, we can say. And then around April and May, okay. Then in the second part of the year, the portfolio started to behave in a better way. I decided to develop new trading system on commodity, especially on uncorrelated commodity, uncorrelated with the mini S&P, which is the driver of the market anyway, especially on a coffee future, which I like very much. It is a breakout underline, which behave quite well. It is very regular in my backtest, so I decided to insert a couple of systems on coffee and also on other markets, okay, on other commodity, just to be uncorrelated with the main driver of the market, which is the mini S&P. So what other consideration about my portfolio? Okay, I can show you that historical trading system on the mini S&P, like this one, developed in 2017, which did very well in the previous year. At the beginning of 2022, did poorly, lost money. And this happened on different trading system on the mini S&P. And this is the main cause of this drawdown at the beginning of the year. Then, as I told you before, when things starting to go wrong, I find the energy, the will to develop new trading system, to start to study again. So I come up with a good mix of strategies for the second part of the year. Okay.
Yeah, Francesco, sorry to interrupt. This is all, can you say bullshit? Okay, because you see, this is the Interactive Brokers report, and you have to choose a benchmark among the futures, the ETFs that is proposed by the broker. and he put SPX, but his real benchmark is Andrea Unger account. He cannot put it here. He saw my good start and his poor start. So, oh, I have to beat him. So he reacted, adding systems to his Titan mix, and they did well in the second part. Now this is the third or fourth year, don't remember, where Francesco shows a much better performance than I did. So he's definitely better than me, and this is clear. But I also have to say that he's younger, so more exposed to risk. And if I'm not wrong, my account balance is much bigger than yours. And obviously, my risk approach to a larger sum of money is more moderate. So the performance necessarily becomes smaller. In any case, great performance, Francesco, but don't be tricked by his words. He wants to beat Andrea Unger. That's all he wants.
No, that's not true. Definitely not true. And also, I'm becoming older and older, so I start to feel the weight of losing money on the market. When I was very young, I was very, how to say, prone to risk. Okay, now with the age, with the family, with children growing up, I know that I'm becoming a more conservative approach. I'm becoming more adverse to risk. But anyway, just talking about risk and just talking about be conservative, we can take a look at crypto's portfolio, which is the best way to be conservative.
Of course.
So here we have the benchmark, which is Bitcoin, and we know that this was a very tough year for Bitcoin, minus 60%, 65% from the beginning of the year. And here is the performance of the portfolio of trading system, mainly on Bitcoin, Ethereum, something on BNB and ADA and so on. So the performance it's not so satisfying because we are talking about 5% with a 20% of drawdown. But anyway, compared to the benchmark, to the buy and hold strategy, which is very common in cryptocurrencies, I can tell you that this is satisfying. Okay, so if I analyze my strategy, my portfolio from the very beginning, 2 years of trading on cryptos, I beat the benchmark in a very astonishing way, we can say, even if this year is not so satisfying. But you know what happened until August, okay, everything, like Andrea, was fine. Okay, then in the last month of the year, the systems, which are basically trading system on breakout logics, started to perform poorly. The reason is that the market didn't trend. As you can see, we have many months in let's say an horizontal trading range. And also, if you take a look at the chart, you can see a lack of volatility in the last month compared to the beginning of the year. So, you know, intraday breakout trading system with a lack of volatility and a lack of directionality, they suffer. Okay, this is, I think, normal. Anyway, for the new year, I will expect a better performance. I hope that there will be a new bull market. We are approaching the halving of Bitcoin, so maybe in the second part of 2023, I expect that this mix of strategy can perform better than 2022, that in any case was a very tough year for cryptos. Everybody knows about Terra Luna, about FTX collapse, and so on. So considering all of that, I'm quite satisfied of this performance. What do you think, Andrea?
Of course you are. You did make money. You made more money than I did. I'm just kidding, of course. I saw one interesting thing here. We all trade our own accounts. Francesco trades his money, I trade my money. But if we put our our strengths together, we would have made much better, because you remember I had a better first part of the year. Apart from June, up to August, everything was fine, and my system sucked on the last part of the year, while Francesco did very well in the second part of the year. His equity is rising, you see, from May, more or less, and especially in the last months, he did very well. So actually, if we had worked together, we would have gotten much better equity lines on the common account, which we have not done, and we should maybe even communicate more, because it's enough to communicate, not necessarily to trade money together, of course. But this strengthens the point that diversification is very important. Diversifying more would have offered more opportunities to make money, because you would have been there where the money comes from. Francesco did well on coffee futures, especially because this is what he had in mind. I avoid coffee because, you know that coffee is on ICE and you have to pay extra for the data feed. I never wanted to do so, not because I really don't like to spend money, but just because I believe to have enough systems on all the other markets. So I saw this as useless. Probably I was wrong, because coffee, actually, I know I have this coffee, but I don't trade them. Is a very interesting market to put into the portfolio. Francesco made this choice, and it was a winning choice, as you can witness from his equity line. In any case, diversification and communication, staying in touch with other traders is always a great opportunity to get new ideas or discover new ways to go. To insert coffee could have been a choice also for me, which I did not, and my account paid for this lack of reaction to the situation that was changing. In any case, I am also confident for the future, because I said I see it's something going in the right direction in the general behavior of systems. In any case, I will have to work on crude oil, I will monitor gold, and we will probably all meet in 12 months from now, hopefully showing better equity lines in any case than we did this year, and hopefully showing an Andrea Unger equity line better than Francesco Placci's, which is really a must for this year.
Okay, thank you, Andrea.
Thank you, Francesco. See you next year. Ciao.
Bye, guys.